Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I would like to share with you my opinion on what is happening in the stock market, okay? Because we had crash in the recent days. So this is the Nasdaq and it's been quite a strong crash actually on Friday. A bloody day for the tech stocks even though they had positive results for the Q3 earnings. So we are going to see what is going on and what to do, what to expect. So the only thing I ask you as always is to leave me a like, an early like. It's very helpful for the channel and the video itself. And subscribe to the channel. Let's begin. Alright guys, so here we have the Apple earnings, but I'm sure you have already saw a lot of those videos about earnings. Basically Apple and Facebook, they were pretty positive as earnings. They all beat expectations and so great overall. Then why do we have a crash like that? Here we have Apple in the last days went down to touch $108 with a peak of $107.72. And so why is that? It is positive now, it should go up. And a lot of people are saying because of the stimulus, because of all these kind of things. Well, I don't think that that is the real motivation, the real reason. In my opinion, the real reason is that it was too much at a premium. It was overpriced. If you follow my channel, I have already done previous videos. And what you can see, I like to calculate the fair values of companies. So I did the last one I did on Apple. I estimated a fair price of Apple of around $87, $88 per share. Okay, so around 90 here, this blue line. And what happens is that since then, the share price was trading at a 50% premium. So people were continuing to buy Apple around $135 per share. And then what happens is that you have a stock, which obviously everyone jumped into tech stocks because of the pandemic. So we realized that the tech is the future, and that's great. Anyway, when you are spending 50% plus premium on a stock, what happens is this one is volatility. Only when a stock is trading at a substantial premium, you have the situation where earnings beat the expectations, but the share just goes down like crazy. And that's it. I showed you, this is from previous videos that I did on Apple. Basically, here is the growth of Apple, okay, in revenues. And I did a scenario until the 14% scenario. And this is the fair price. Okay, so $93.94 per share with the 14% scenario. Now, when it's trading at 135, like that, or even 120, these kind of things, you realize that it's trading at a substantial premium. It is priced for the exceptional. It would mean that Apple should grow at 17% per year over the next 5 years, 18% per year over the next 5 years. And then obviously, after a while, when you have the enthusiasm that goes off, investors start to realize that the price is too high. It's too high. And what happened? You have positive earnings and down. The shares goes down. And so this is why. It's not because of the stimulus. It's because the market over the long run goes through the fair prices. So obviously in 10 years the share price will continue to go up if Apple does well. But in the short term, we cannot think that this kind of rise is sustainable. It is not. Sadly, this virus just brought a lot of new investors to the stock market. And what those investors have seen is that stocks just goes up because they started to invest in the stock market in March. So they think that this is something normal. They think that doing 157% in 5 months is something usual for the stock market. Now, sadly, what these people don't realize is that it is absolutely false. The stock market, it doesn't do like that all the time. We have long periods when the stock market, it doesn't do absolutely nothing. Now, in my opinion, to understand what we are doing right now, we need to look at the graph itself. Overall, this is the Nasdaq. So what does it mean now? That do you have to fear? Do you have to sell? In my opinion, not yet. We are still in the safe space. And what do I mean by that? In this case, a little bit of long-term technical analysis comes into our help. Look at that. Now, here is from March. The stock market just bottomed at the end of March, and now it's been a positive trend, okay, an uptrend overall for the last 6 months. Now we hit the top in September 2nd. The Nasdaq around 12,400 points. So what happens right now is that we had a crash, substantial crash, and we bottomed here in September 21st. And from here, a bounce back trying to do another high. Anyway, the market has not been able to pass the previous highs, as we can see from here. It's not being able to reach those levels, stopped before, and now it is pulling back again. What is important? This is very important. Those levels here of the bottom that we reached at the end of September are very, very important. Those levels right here. Because look at that. High and then a lower high on the Nasdaq. If those levels here, which basically I did it with the rectangular, the green rectangular here. So if the market is not able to hold those levels, we will have a downtrend. So the market will shift, in this case the Nasdaq, but then the S&P is correlated, everything is correlated. We will shift from an uptrend to a downtrend if that happens. So this level here, it's very, very important, and we have to see whether the stock market will bounce back again, or if it breaks below those levels and closes below those levels with a full candle, and then the likelihood to have another move down, it will be very, very high. If the market is not able to bounce back from those levels, which the key level here, it's around 10,700 points for the Nasdaq. This is the key level to take a look at. If the market, it doesn't exist and goes down, then the trend, it will be something like that. Let me just put it in red. Now I think you are gonna see it better. So this is the risk, and we are not yet in this kind of scenario, but we have to see here. This is the key point over there at around 10,700 points for the Nasdaq. If it bounces back, we will have a period of sideways. Okay, it doesn't go up, it doesn't go down. But if it breaks below those levels, then it is gonna be a downtrend which is since August. September, basically, the 1st of September, a medium-term downtrend, and if that happens, you can forget about all the stocks going up forever. So it's very important to pay attention to this kind of thing, and do not believe that stocks go up forever. This is not true. Now, obviously, we have the US election. So uncertainties is obviously present in the stock market, as well as a new wave of this pandemic, which even in Europe is a huge problem right now. So new lockdowns probably. Obviously, it is not an easy situation. So, assuming that stocks goes up forever, no one can beat the Fed, all this kind of thing that I hear online, this is just all BS, guys. Okay, it's not like that. Stocks, they go up, but they go up until a certain point. When the fair price is X and the stock is trading at 2X, there is a time when investors realize that, and then boom, you have huge volatility and the stock eventually stops. This is the Nasdaq, but the same thing obviously is true for all the big stocks out there. So we had Tesla yesterday minus 5.5. Here the same. I told you in a previous video, which in my opinion, the fair price right now for Tesla is around $300, $290 in this space. Now, obviously, it is trading at a premium. It doesn't mean that it will go up forever. It is likely that sometimes it could just go back, okay, to hit again the fair price. Another important stuff that I want to show you, you will see very easily that on the Nasdaq, is the RSI, okay, the Relative Strength Index. Now, a lot of people are probably say, oh, technical analysis is BS, it doesn't work. Well, I like both of them. I like fundamental analysis, as you know, but I also like to keep track of the market movements with technical analysis. Now look at this, the RSI 40 period, so it's a long-term RSI. And what we had is that during the top, so in the 1st of September, it was that high, 68.55, and then when the market tried to go back to those levels, we have a really lower RSI, 58.67. Now what that means is that the market is losing strength, it's losing upside power, and that's something to keep in mind in the next 3 to 4 months. So we will see on Monday what will happen if we are able to bounce back from this key level over there. Then the market could continue to do sideways or try to go back to where it was a couple of months ago. Anyway, pay attention. If we break and if we confirm to go below this level, then be very careful, because it can be likely to go down a little bit more. I'm not saying that we are going to crash like we did in March, but what I'm telling you is that you could get frustrated if a downtrend happens for a while and you still think that the market goes up forever. That will not be true. So pay attention, and this key point for the Nasdaq, similar, very similar stuff for the S&P as well. We see that we have now bounced back from with the S&P around 3,200. Is the same stuff, okay? Just very, very similar. So pay attention to those levels and let's see how the market will open on Monday. I hope you are all healthy and safe, and I hope you find this video interesting, guys. Subscribe to the channel and leave me a comment below. Tell me, what do you think? What are your thoughts about that? And as always, have a wonderful day.